Hey guys, Mike here. So, oh boy, had some big earnings just roll in, and I'm going to put this video out quickly because I got to get my son to a Cub Scout meeting. But I wanted you to be up to date of what's happening with the economic data, with all the earnings that just flowed out, and then we'll go into, what can keep this rally going, what we got ahead of us on the chart and stuff, and obviously the housing market not looking too great. I mean, home price growth slows by a record amount in August. And this goes on to say U.S. home prices grow slow by the largest amount on record in August, accelerating faster than economists' expectations and further cementing that the pandemic-era buying frenzy is largely over. A national measure of prices in August rose 13% over the same month a year ago. And so this is the Case-Shiller index we're talking about. The good news is, and I don't think it's going to show up, but rents have been going down. As you can see right here, had another decrease in rent months over month. But if you go back to, I think it's July right there, it's been going down. The problem is the Fed uses old data, as I've harped on before, and you hear a lot of people griping about this. I don't know why they use old data, so I don't know if this is going to show up in the next CPI reading or not for the core and stuff, but we'll see. And again, if it doesn't, then they're definitely using old data. Now, forgive me for using Twitter, but it's just the quickest way to get this out to you. And this, if you ever want to look for stock news, stock market news on Twitter does a really good job of getting it out pretty fast and pretty dang accurate, by the way. V says we expected, beat expectations on top and bottom line. The stock's not really moving in after hours at all. If you're in in-phase energy, they're killing it. And I'll show you how much these stocks are up and stuff in after hours. Google, nope, missed expectations on bottom and top line, which I actually knew, and I'll tell you how I actually knew that was going to happen. And cloud revenue beat expectations, was good. Google service revenues missed, and their YouTube ad revenue missed, and that's kind of a hint of how I kind of knew. Operating margin, was down by about 2.9% compared to expectations, and operating income, obviously missed by a country mile when it comes to their expectations. And then Microsoft, they beat on top and bottom line. Again, I'll show you where they're down. They're actually down in after hours. I think that's because of the slow PC growth. And you can see Google's down about 6.5%, which is huge for a stock that's weighted that much in the S&P and the Qs. Microsoft is only down 1.44%. It was down about 3 before. This could be positive after the call, though. We'll have to see what they have to say. And then in-phase energy is up big. It's up 6%. We'll see what they got to say on the call. Of course, I mean, energy is a thing people keep piling into. And in-phase is a very popular one. Texas Instruments, what I didn't mention before, they actually beat expectations, but they got it down, and they're getting destroyed in after hours. Should expect that. And don't forget to hit that like and subscribe button, guys, and share the video. It really helps beat the algorithm and push the videos out to new people and continue to grow the community. I really appreciate everything, guys. And of course, what that means is they'll probably drag every semiconductor stock down with them come tomorrow. I know the Qs are down about 1.6% now, and after hours we'll see overnight where that goes and everything. But this is the first big group of stocks to report, right? And I know I can tell you the reason why I knew Google was actually going to miss, because I got an email, and being a YouTuber, I get offers all the time to do sponsored videos, right? And I turn them down all the time. And I got a video just yesterday, and it was saying that, the amount of money they pay us to do these videos, which of course I don't hardly ever do any of them, that, is coming way down. And so what's your lowest rate you'll take? And I don't even have a rate, guys. That's the stupid thing. But I'm like, I don't do it. And so don't worry about it, right? I just delete. I hear from Moo all the time. I'm like, nope, sorry, there's other big YouTubers already pumping that one, and I have no interest in it. So, but I said, well, yeah, Google's definitely going to miss it, because, if we're getting paid less, they're getting paid less and everything. And so, we kind of knew it. So I'm not surprised about that at all. We'll see how the market reacts tomorrow, because we've seen this movie, right? We've seen the ending. We see how it goes, where you go, ooh, it wasn't that good, but all of a sudden the market can flip it and go, well, it wasn't that bad, really. I mean, it could have been worse, right? And so we'll see if this is considered a trip over the finish line, or they fell short of the finish line and stuff like that. And so, looking at the charts, and we'll go into, does this rally still have legs? I'm going to tell you something where if I make a mistake, I'll just say it. It's not so much a mistake, but just something I underestimated. And I'm going to talk to you about that. And if you go to the daily chart, you can see we're right up against that 50 simple moving average right there. You see the RSI still looking bullish. Indicator right down there below. Yes, the momentum indicator. You can see momentum is building for sure. and it continues to build, I should say. But, you know, if you go back and say, okay, well, during the last real rally, what happened on the daily, you can see right there where it bumped up against the same thing, the 50 SMA. Everything looked bullish. It comes up, turns over, retests, like it loves to retest, and then takes off, right, with a lot of green candles. And so we're going to see if that's what happens here, because if you look on the S&P, basically we're only around 5.5% from filling that gap right there, and we know we love to fill gaps, 7% from the edge, and that's not a lot at all, guys. We're moving 2 to 3% every day, it seems like, right? And so we'll see about that, because we got, again, I said yesterday, it's all about the earnings, right? And if we go to the hourly, you can see right here that this is the 50 and the 100 crossing over. We haven't had that in a little while, it seems. And so obviously that is a bullish thing, and you can see all the momentum building up and everything. And of course, it's oversold on the RSI on the hourly. But when you go back to the last rally, which was, I believe, the last time the 50 actually crossed, you can see right here, as we come up, we don't get a definitive cross, and then as soon as it crosses it, it goes past the 100, 200, and bam, on the hourly, and just takes off, right? Like a bat out of hell, basically. And so, again, comes back down, retest, but that's what you're looking at. And the truth about this rally is, and where I think I'm underestimating something, I didn't bring it up the other day when people say, can we, you know, does it have legs? Can we just continue to go to all-time highs or whatever it is? Understand where I underestimated the other day thinking about it was I looked at what took us there before versus if it happens again, it's because literally, remember, this market is like a dog in heat. It's an addict, all this stuff, and any little thing can find, right? So if, and this is my prediction, what will happen, eventually the treasury market is going to get in trouble. All right, the bond market is going to have some problems. And it's going to force the treasury to either start buying them, force the Fed to pause rate hikes and just hold them where they're at. And any change in monetary policy whatsoever, the market is going to perceive as bullish, which, I mean, of course, we all know for the economy, those rates aren't good. But remember, the market can disconnect itself like we saw in 2020 when literally companies were shut down and their stock prices were soaring, okay? And they had no customers. It was amazing to watch. But that's the way it works. In 2018, the official announcement that they were going to pause rate hikes did not come out until February 23rd of 2019. The bottom was December 24th, 2018. I showed a video on it. Go look at that yourself. But that was the official. 3 months later was the official one. But there was hints, like Fed presidents getting rolled out there saying, oh, you know, we're probably going to read and look at this and blah, blah, blah. So the market says, let's take a gamble and move, right? And the other thing I was talking about in the comments with somebody was, you know, you got to think about what's happening with these firms, right? These hedge funds and stuff. They came out there, they said the world's coming to an end in 2022. You know, JP Morgan and Morgan Stanley, all of them said it's over, we're done for, blah, blah, blah. And now what are they doing? They're coming out saying, well, I think we were early. I don't think the recession, we thought it was going to happen third, fourth quarter this year. Now we don't think it's going to happen until third, fourth quarter of next year. So they push this market way down. And so what is in the interest of the hedge funds? I'm not saying this is going to happen. I'm saying if it does happen, this is why it's happening. Because they say, well, dang, man, we pushed this market down too fast. So now we got to push it back up, right? To get ready for this recession we're going to have almost a year from now, it seems like what they're projecting. And then we'll build a short at a much higher spot and make billions again coming down. Isn't that great? That's wonderful. And, you know, and so that's pretty much what I would not be surprised if it happens. I don't want to say I think it's going to happen, but I kind of do. But it wouldn't surprise me a bit. But yeah, I'm definitely expecting the bond market to get in deep trouble. And liquidity, again, the Treasury Secretary has not come out and start asking firms, do we need to start buying bonds just because she feels like it. All right, they know what's going on behind closed doors. They can see all the data. It's obvious that there's more sellers than buyers right now and all that stuff. I mean, look at God knows TLT. Whew. You know, but going into, you know, what to expect tomorrow, you can see plain and simple here. Obviously, more big earnings coming out in the morning. I mean, waste management, I think it's going to go up. I'll play the game with you. I appreciate you playing in the comments last night because we always need trash, right? Taken out. Kraft Heinz is a staple. It'll probably go up. Hilton, we get to see if we're traveling. I don't know about that one, to be honest with you. Even though in Florida, I know dang well tourism is, you know, maxing out up here. Meta, that's a tough one because they changed their business model. I don't know if people are buying that or not. It is pushing higher. We'll see. Ford, obviously GM went up today, which shocked me. Ford could do the same. Teledocs is hot garbage, you know, and it tends to do worse. But at what point in time is a bottom for that company, right? I don't know. And so the rest of them, I mean, maybe you can go down here and see O'Reilly Auto Parts. I think we're still buying parts and stuff, and I can't believe how expensive parts are. Oh my God, I got one of my cars fixed a couple weeks ago, and it's unbelievable. Wingstop, we still see eating out. I can see that happening. I mean, tell me in the comments what you think, whether these are going up or down. Wednesday's gonna be all about the mortgages and everything. So more real estate and information with building permits. A lot of people are gonna be watching that right there to see how slow we are actually moving here. And then you get the inventories. Oof, how bad off are we on inventories? That's gonna be a big one to watch. New home sales. And so kind of loaded on the front side on that. And so we're going to see, you know, let me know in the comments. And, you know, if you look in the comments, that's what I always ask, you know, ask people how they're doing in their area of the country. I think each area is different, right? In Florida, we're booming. But other people say, like in mid-Georgia, it's really slow. Illinois is dead, but they live here in Florida too, and it's doing good. This other state over here is doing really well. And so, you know, I think it just has to do with where you live at and stuff like that. So I think it has to do, like with the rents. Like, when do you move? Most people move in the summertime, right? They don't want to move any other time because they don't want to move their kids out of school and things like that. And so, but rents are slowing down. So that's one to pay attention to when we get, obviously, core inflation and stuff like that. That's going to be big. But, you know, earnings are going to move this market, and we'll see what happens tomorrow. Obviously, should the market be down or up? According to those earnings I just saw, they should be down. But, you know, we'll get to see where's the market want to take us, because as it keeps breaking those moving averages and support lines and getting closer to filling that gap, you know, you can just feel that it's like, is this a rug pull? Is it not a rug pull? You know, your guess is as good as mine. I always said, run from people that say they know 100% what's going to happen tomorrow or for the rest of the week, right? And I'm just saying, my argument's simple, that the big money, right, and these hedge funds have realized they were too far ahead of the game. They thought we were coming to Armageddon right now, and that's not happening. They're predicting Armageddon next year, you know. And so you got to ask yourself, if you really thought there was a real Armageddon, right, going to be happening in the world, and you knew you had 12 months, or roughly, say 9 to 12 months, what would you be doing? I'd be checking everything off my bucket list I could, right? Trying to do good things, positive things, trying to make more money, whatever. Well, what do you think hedge funds are going to do? Is keep, because it's hard to short the market when it's where it's at now, right? Because it's going down so much. You know, you got to look for that prime time to short it. And so that's why short term, it won't surprise me if we move up and then short it again, or they try to just push us all the way through the midterm elections and going into December, right? Wouldn't surprise me a bit, because we're still running the credit cards up, okay? Visa didn't beat their numbers for no reason. So, you know, we're still doing it. Heard it from American Express too. You guys even in the comments said, you're in stores, you see people just swiping those credit cards like crazy, right? And so watch for, I think it's Harley Davidson maybe. I think it's reporting this week. Watch for that, because if that one goes up too and Ford goes up, I mean, that I'll tell you, those are big ticket items, guys, right? Those are big ticket items. And so anyway, let me know what you think down in the comments, where you think these earnings are going to be tomorrow, and what you think about the economic data, and where do you think the market's going. Always love to hear from you, okay? Have a good one, and I'll see you tomorrow.